Financial expert Mr. Ramalingam has joined us today. Sir, what is the best investment approach to create long-term wealth in the stock market?
Stock market is a knife. So in the short term, you are catching it on the side of the blade. Then it can hurt you. As a long-term investor, you are safely catching it on the handle. It is going to be rewarding for you. It will become a weapon which can destroy inflation in your portfolio. If you are catching it with the blade, it can hurt your portfolio by creating permanent loss of capital, which will affect long-term compounding and long-term wealth creation. So be a prudent, smart investor who can catch the knife in the handle and make it as a weapon for you. It will not hurt you, it will strengthen you. So an investor to create long-term wealth, investor has to go through years, like generally a business cycle is 7 years time frame. So an investor has to go through a 7 year period. 7 years is basically a business cycle, market cycle, recovery, everything will be there in a 7 years time frame. So you go through that 7 years period. Stay through that 7 years period looking at macros, not looking at macros. Don't look at GDP, don't look at the interest rate, don't look at the inflation rate, don't look at the next year is going to be the election or money. Ignore all those things. Keep your money for long term. Whatever the long term money you can park it in equity, forget about it. A good investment, invest and forget about it. It will go through years of, it should go through few years of negative returns. It will go through few years of no returns. It will go through few years of super duper returns also. So at the end of 7 years, if you take it and see, it would have given you 12 to 15% return minimum. Bare minimum it would have given you this kind of return. But 12 to 15% return is sufficient to create good amount of wealth. Many people consider this as a simple and boring strategy, not an exciting journey. So they want to try something exit. So they go out. They want to play smart. They want to come out of an investment when it is like making loss, and they want to go back when it is again making profit. In the meantime, they lose a lot of fun opportunity, right?
Thanks for your detailed explanation. Are you in search of a personal guide who can remove the stress of handling your finances? Then please feel free to avail our expert consultation. And also you can attend our webinars to gain investment related insights. Both the consultation and webinar are absolutely free, and you can find the link in the below description. Please like and share, and do subscribe to Holistic Investment.